this video, I'm going to discuss the system the banks use to make themselves rich and make you poor. And it's very important that you have to know about this and learn about it. And once you discover what I'm about to tell you in this video, it's going to change your mindset and the way you think, the way you keep your money in the bank will never be the same. So please stay all the way to the end and watch this video to the end. Hello everybody, welcome back to my channel. My name is Donatien Girangai. In this video, we're going to be discussing about important topics about why we keep our money in the bank and what we should do with it, okay? So if you're keeping your money in the bank and it's sitting there doing nothing for you, then this is the right video for you to watch. So it's going to be a very exciting and interesting video to watch all the way to the end. So let's get into it. Fractional reserve is a banking system when banks are allowed to only keep 10% of your money in the account, while they lend the rest of your money out as loans to other customers, other banks, and other corporates. This system allows more money to circulate in the economy. And this is the reason why when you want to buy a brand new car, you go to get a loan, right? To get a car loan. If you want to buy a brand new house, you get your house on loan. If you want to go to school, you get a student loan. You want to open business, you get a business loan with the bank. And with all of this, allows the money to go into circulation, to go to each individual, whether you're a business, you are a corporation, another bank, the money circulation goes to everybody. And because of this reason, for example, if you go to the bank, right, and if you deposit $1,000 of your money, the $1,000 that you deposit, the bank only keeps 10% of that money on reserve. This means that the bank loans out $900 from that $1,000 of your money. They loan it out to other customers in the form of loans, credit cards, home loans, student loans, and any kind of loans, as you name it. The bank is only allowed to keep $100 in your bank account for you. That's the money that they're keeping for you. And a lot of people didn't know that. So that's why this video is important for you to watch. So make sure you stay all the way to the end and you learn more valuable information along the way. So when the banks only keep that $100 in the bank for you, they show you 100% balance of that $1,000 that you deposit. So if you go back to your bank account, you see that the $1,000 you deposit, it's sitting there. But in other words, you don't have that $1,000. You're only having $100, but they show you 100% balance as a digital currency. So in other words, that balance they show you is nothing but just an imaginary number or a fake balance. Why is fake balance? It is fake because it's not the actual number that you deposited. It's not correct. Fractional reserve is very beneficial to the banks, but it has its own disadvantage. It has its own disadvantage because what happens if all customers go to the bank all to withdraw all their money all at the same time? Well, if customers want to withdraw all their money all at the same time, then the banks would collapse. The banks will collapse because banks do not hold all the money in cash to give to everybody at the same time. And this is known as bank run because customers fear that their banks will fall. And this already happened in the past, known as the catastrophic bank failure that happened during the Great Depression. And so many people lost their entire life savings. And as a result, the Federal Deposit Insurance Corporation created the Banking Act of 1933 to protect the deposits of participating banks, to make sure this doesn't happen again. And the FDIC guarantees customers would get all their money back in the event if the bank collapses or the bank loses all the money. However, the FDIC insures a maximum of $250,000 only. So that means if you have more money in the bank, then you lose the majority of that money that you have in the bank. For example, if you have $500,000 sitting in the bank, and in such an event where the bank collapse and everybody go to take all their money, they don't have money to give to everybody, the insurance will kick in to give you only $250,000. And the rest of your $250,000, you lose that money forever. You're not getting that back. Banks profit off your hard-earned money. And during inflation, banks loan out your money with higher interest to you and other people who gave them that money to gain more profit off you, while you and your family struggle to pay for high cost of groceries, gas, water, food, to pay other bills, rent, and mortgage. And they don't really struggle at all because they're profiting off of your hard-earned money. So instead of keeping your money in the bank, you should be investing your money, whether it's in the stock market, in the real estate, whether it's a physical property real estate, or investing in the real estate in the stock market. That's perfectly fine. Or whether you want to put into retirement account like IRA so that your money could grow one day for you, then that's perfectly fine too. But if you keep that money sitting there in the bank, you're not getting rich off that money. The bank is taking that money and they invest in it in other companies themselves. They use their money to bail out other companies who are going bankrupt or who are failing or who are not doing well. They loan it out, like I mentioned, to other businesses, other companies, to schools. There are so many names to really name it. And in return, the banks become so rich spending individuals' money to do things. And then if you go to get a loan from them, then you have to end up paying them high interest of the same money that you have in your bank that they're giving it to you back as a loan. So does that really make sense? So I think it's very important. So to both us hardworking families, whether you are lower class, middle class, and you're working hard every day to put money on the table for yourself and your family, and you're looking out for your future, invest that money. Don't let it all sit in the bank, okay? Invest some. And me telling you all of this, by the way, is not a financial advice, okay? This is just for educational purposes and entertainment, and I'm bringing valuable information to you. So you gotta make sure you do your own research and speak to your financial advisor if this information is right for you before you act. So I appreciate, and if you find value in this video, please take your time to like and subscribe and share this with your family, with everybody that you want to be successful in life and have a better future tomorrow.